Hey everyone, welcome to another episode of the Insurtech Building Blocks Podcast. My name is Cory Schmidt, and I'm your host today. I'm excited to be coming off of a high from our BlocBuilder conference and spending time with customers and partners. What a tremendous week, and we'll actually talk a little bit about that as well during the podcast. But I'm fortunate to be joined by someone who actually participated at BlocBuilder and was part of our State of the Industry panel, John Greene from Tribe Branch Resolution. Welcome to the podcast, John.
Well, thank you. It's great to be here. Going to Arizona was just wonderful.
Yes, a good change of pace for those of us that are in a little bit more moderate climates this time of year and can't decide whether it's spring or winter still. So enjoyed it. And you said you're back on East Coast time.
That I am.
Okay. All right, good. I'm still struggling. I'm not going to lie. So I think I spent a little bit too much time on that side of the country, and so I'm still trying to get back to Central. But well, I'm glad you're here, John. I know that you've got a lot of experience in the industry. Obviously, spent some time at NABIP and now with Tri Branch Resolution. So I think it'd be great if we could spend a little bit of time on your background. You know what you've done over your career and the changes that you've made in the last bit.
Sure. So, I love working with agents and brokers. It was never boring, which is why I stayed 24 years. I worked in all market segments, but I was the Medicare specialist. I worked on the MMA when the Obama administration tried to cut overrides through a rule late in their administration that it was tagged as the 120.4.4. I fortunately had friends in the new administration coming in and was able to get that removed from the regulation. I got the OEP restored in 2016 as part of the Cures Act. So I've always been very active in the Medicare space. I've also worked in long-term care, getting the long-term care partnerships rolled out nationally. We, of course, dispensed with the uh, taxes in the ACA in 2019, the Cadillac tax and premium tax and the device tax, which was an interesting journey. So in October, I started Tri Branch Resolution. I thought about the three branches of government, and that's where I came up with that name. And it's been very interesting transition doing it all on my own, but it's good to be back downtown again.
Awesome. Have you been an entrepreneur before, John, or is this your first foray?
That's my first foray. And that was something that I got out of AgencyBloc personally, was tips about how to run your business, how to prospect, and the sort of follow-ups that you should do and how you should do them, manage them. That's something that, it's not in my wheelhouse. So I found that those sessions very good for me personally. Thanks to AgencyBloc.
Yeah, that's great. And in fact, thanks to Mary Tautimas and the outgrow session that she did for us during the Block Builder, she's just a phenomenal speaker. And then that framework I think was really interesting. And her commentary about you gotta get the next no to get to the next yes. Like just the whole mindset of it was really fascinating. I really enjoyed that session. And Mary's always been a fantastic partner of AgencyBloc. So I fully suspect we'll see her again.
That's great. I actually did it during the session, and it actually paid off. I got responses.
Well, that's
So
amazing.
a testimonial that it actually works.
That's awesome. Well, hopefully Mary's listening to this podcast, and if not, we'll make sure that she actually tunes in so she can hear the good news about her impact
Great.
reaching out. So yeah, Block Builder, obviously, we just had Block Builder about a week ago. We spent 3 days in Phoenix, Arizona with our customers and partners. Just a really tremendous event, like just my favorite really event of the year, just because how supportive and invested our customers in everything that we're doing really, makes me really proud about our team and how we've built this company and the work that we're doing to help impact our customers. John, you personally participated, I know, on the State of the Industry panel and in some other ways at the conference. I'm curious, from your perspective, how it went. Maybe did you learn anything? Obviously, you learned some things from Mary, but beyond that, I know you probably had a lot of conversations with brokers, and I'm just kind of curious if you had any key takeaways.
So I hear a lot of concern about the Inflation Reduction Act and the $2,000 deductible cap. And I did a roundtable on the Inflation Reduction Act. And I think the big takeaway was really around the difference between small molecule and large molecule, which is really the ability to take medications by mouth, which is the small molecule, or the promise of that technology for people with cancers to be able to do it from home. And so that really got a conversation started about, just other impacts that were probably unintended in the Inflation Reduction Act. And we can go into more of that, but that's what I was hearing. And I thought Bill Hemsher's, session was highly attended for that reason as well.
Yeah, I certainly learned a lot about the drug market and some of the things that folks are trying to do to get creative to try to control those costs. I think I've seen a Kaiser survey that, most employers, the biggest concern that they have is around prescription drug costs. Like that's really what's kind of the key driving force. I'm curious on what did you call it? Large
Well,
molecule.
large molecule versus small molecule. It's
Yes.
just basically, biologics are the large, where you have to
Okay.
go to a doctor's office to have it administered, versus a small molecule, which is like taking an aspirin.
So there's a concerted push to try to make more drugs available in small molecule format? Is that what we're seeing? Or what's the Inflation Reduction Act kind of, how does that play into that?
Well, it's actually flipping research and development to large molecule because of a patent extension that's longer than small molecule. So investments are flipped, and that's very concerning for the industry.
Yeah. So the manufacturers are trying to protect those drugs for a longer period of time by doing those in large molecule format.
Yes, and there's legislation pending in both houses of Congress to equalize that patent longevity between the large and the small molecule, which ought to help send a signal to the community that, hey, it's safe to. I think that what they were thinking is that large molecule breakthroughs take longer and are more difficult. And so they were giving them a patent advantage for that extra work. But what it's done in the immediate term is flip it on its head. And we've seen some promising cancer medications come online that are in the small molecule. And so many people have difficulty with travel, making an appointment with a doctor, waiting 2 hours, getting the injection, getting back home again. It's a whole day uh, event. Whereas small molecule, you wake up, pop it in your mouth, have a glass of water, and you're done.
Yeah.
So it's a
Interesting.
convenience thing, and it's an drug adherence issue as well.
Okay. Yeah. You mentioned the Inflation Reduction Act. Obviously, the big kind of headline that I saw just from, more of an outsider perspective was around the $2,000 prescription drug cap. I'm curious, like, how has the Inflation Reduction Act played out in the Medicare market, and what do you expect for maybe additional impacts that we've yet to see?
So when the MMA rolled out, there were 47 carriers, and today there are 7, and half of them don't offer commissions. It feels like they're trying to run Part D carriers out of business. Their margins have always been very, very thin. This is just making it the way that they um, calculated troop versus MOOP. People who are in the business, hopefully, they know what that is, right? And what it did is it inadvertently transferred financial responsibility, to the carriers. So they priced for that, and so when the premiums came out, they were very, very large. And so, being an election year, the prior administration did a demonstration project as a means to funnel money back to the carriers to backfill that. But in spite of that, carriers have withdrawn from service areas. We're really concerned about that in rural areas, and they have discouraged enrollments in their plans. They want people to switch from PDP to MAPD, where it's more profitable. And they've reduced or eliminated commissions as a way to also try to transfer. So Agents have been accused of shifting patients. There's a lot of concern about churn. Well, actually, the steering is occurring through the carriers. And I think we're going to see more of that this coming AEP as well. I don't foresee it stopping.
And it's interesting. I was talking to a couple of our customers who do a lot of Part D work, and they mentioned how that's actually more work than some of the other products they sell. And then simultaneously, they're not getting paid for that work either. Like that seems like a really bad scenario. So your expectation is maybe that some of those beneficiaries would be going to MAPD, or maybe that's what you're saying. That's what the carriers ultimately
Well,
are
that's what
pushing
they
for.
would like. But I think that, an agent does their due diligence and decides or helps them figure out, right, what's the best fit, both in terms of financial as well as their medical needs. So satisfaction is so high because agents place business properly. And they often do the PDP work if they've sold them a med sup as sort of a courtesy. But now it's become, and with the new rules and the changes in the formularies, has been dramatic. Even tier one generics are showing up on higher tiers. And there's so much manipulation of the formulary. And we really need a Part D OEP. When I mentioned that we got it restored, that was just for MA, but they don't have the same consumer protection that MA beneficiaries enjoy. And who needs this even more now than ever, right? Because of what you talked about, drug costs. If that's really the concern, then I think doing an OEP for them would be the right thing to do. It's a simple fix. I've talked to CMS. They said since it's already set up for MA, it's literally flipping a light switch to make that happen. So it could occur in the fall, and we're trying to shop it to various congressional offices to do this. It's worked really well. AARP is fine with it. The Medicare Rights Center has no objections. But we do need to fix some of these things around the IRA. It can't continue the way it is.
What specifically do you think should be changed, John, as it relates to the IRA and how it's structured?
The first thing I do is make sure that MOOP and troop issue is resolved. I think that's might even be an administrative thing that they could do without legislation. And then I think you really have to address the $2,000 deductible cap. When you look at the number of people who are affected by it, it is extremely small. I don't think that it's going to have the impacts that they hope that it would have for a population is, like I said, very, very narrow. And then this notion that you could go to the drug counter and not pay the full freight of the drug and be on a payment plan in the 11th or 12th month of the plan year creates so much uncertainty for Part D carriers because they could just never pay. Who's going to pay
How
those
do you enforce
costs,
it?
right? So this was the last major bill done during the COVID period when there was no stakeholder involvement. The hearings were closed, and I think they were well intentioned, but they didn't get industry feedback on how this might work. And it's not working. And we told them it wouldn't work. And I think, with the pressure of a midterm in the following year, plan year, it's critical that they address it by then.
Okay. Right. So you and I talked a little bit about that topic around the administration changes. Dr. Oz is now, I think, confirmed in the seat. He seems generally supportive of the Medicare Advantage market, and I'm curious, like, how do you think he'll approach things? Do you think he'll be a proponent of some of these changes? How do you think things play out with the new administration in place?
So I attended the hearings for him, and I think he's a very practical guy. He's very data driven, and I think we can demonstrate those facts. And yes, he has been historically favorable to MA plans, but I don't think he understands what changes are necessary. They put out a rule for ACA market that actually made some sense and was practical along the lines that you would expect from a more friendly administration. Even the rules on the payment for Medicare got a far larger raise than anyone ever anticipated, over 5%. Another encouraging signal. So I think what they want to do is kind of stabilize the marketplace, if not fix everything, at least bring it back to equilibrium. And then we can fix things and make the market work best. I mean, given how many people are coming into the market, um, I think it's in everyone's best interest to do so.
Yeah, that makes sense. Yes. Similar on the political spectrum, I know there was a report issued by Senator Wyden's office around an investigation into, I think it was really around the distribution network, right? Or distribution model for the Medicare Advantage in particular. You had mentioned that they, made a clear distinction between lead generators and marketing organizations separate of like IMOs, FMOs. I'm kind of curious what you saw there and how you think that might change the perception of the different entities that are involved in the distribution of Medicare.
So remember that his investigation was really centered around the COVID period. When there was no distribution, people were in lockdown, and carriers didn't know how they were going to market and enroll their beneficiaries. So they went out of their way to create these call centers. Some of them were offshore, beyond the reach of regulatory authority. It wasn't the best of times for anybody, right?
Right.
So his solution seemed to be focus on a problem that doesn't exist anymore. And I think that now we have some separation from that. I think things are more at equilibrium in terms of the market. You don't see the level of complaints anymore. They're like at pre-COVID level. Time has a way of getting people to think a little differently when you don't see the same behavior anymore. And so I think it's a real possibility. And there's a senator who's already proposing legislation to remove agents and FMOs from that definition of TPMO. When I was at NABIP, we gave them a ton of information about the differences between all those groups and how we were not them, but they decided to lump us all together. And we said, this will cause problems in the future if you keep us all tied on the same life raft. And I think this is demonstrating a loosening of that mantra or, belief. Because once you get smeared with middleman, you can't get that stink off. No one knows that better than the PBM community.
Yes, I thought it was interesting when I think it was last year when the 1,000+ page ruling came out, and I was trying to understand the what they meant by TPMO, and just it seemed like they threw everybody into that definition except for the actual like writing agent for a policy. So your expectation would be that maybe they will adjust that definition over time and maybe have it be a little bit more purpose built for these large lead generators and call centers.
Do. And I think that the court case in Texas, which stayed many of the most egregious aspects of the marketing rules, also is an indicator that it isn't going to fly. You just can't sweep everyone into a rule. And this is typical of CMS in its general rulemaking process. And it just happened to be agents and brokers this time.
Yeah. Okay. What's you mentioned NABIP, obviously you've got a long history there in terms of, getting some of these things to the forefront of CMS so they can consider, how their rulings affect the agents and how they're operating their businesses. Like what's the best way for, agency owners and operators to get their perspective understood by the folks all the way up within CMS and even up to the CMS administration as they think about how to roll out changes and how to make those beneficial for the broader industry?
We have to stay engaged. And many agent groups have annual meetings here in Washington. I think people need to attend those, meet their legislators. Agents tend to be very active politically because they're regulated both at the state and federal level. And so many of them know who their DOI is or know the phone number of their local congressman. So I think you have to keep working it and educating. There's a lot of turnover in Congress, I know it's tedious. Some of them are roofers and, different professions outside of what you know. I think you need to trust their health aides. They know what they're talking about. They know what they're doing. They still need to be educated, but keep in mind that the legislator listens to them. And so if you can get through to the 24-year-old across the table, you've done, and it's follow up. What did we talk about at the top of this podcast, right? It's about the follow up. And so you guys come by this naturally. You know how to do this. And it's the same thing in politics.
Yeah, so we basically need all of our constituents and agency operators to understand the outgrow concept, right? So that they know how to send the right follow-up text messages and emails to get action.
100%.
That's awesome. As you kind of think forward to the rest of 2025, John, and into 2026, what policies or specific legislation do you think brokers and employers should be watching for and paying attention to? Like, what do you think are the most impactful things that are potentially on the docket that could sway things either in a positive or negative direction?
Sure. Well, we mentioned the TPMO definition, I think is important. I think there are other marketing issues that get in the way. I think scope of appointment creates no beneficiary benefits. Imagine going to a car dealership and the car dealer had to say, I'll see you in 2 days. Their heads would explode, right? They want you to walk
48
out
hour
with the car.
48-hour rule for buying a used car. I love it.
Yeah, it's ridiculous. These are captains of industry. Just because they turn 65 doesn't mean that they're idiots. The disclosure requirements, again, a waste of time. When they found out that agents could be, in all 50 states certified to sell, they didn't know what to do about that. So they just made it even uglier. I don't know what the purpose of that is. And keeping records for 10 years for a recording also serves no purpose. If there are no complaints within the plan year, you wipe the slate clean. It's cheaper, it's less vulnerable to breaches, and we know how many breaches there have been in the healthcare space. Seniors don't understand the cloud. It's kind of silly to tell them, we're recording this and we're going to keep it for 10 years. Again, they couldn't give me a rational reason for it, but keep in mind that HIPAA also has a number of requirements where they keep things for 10 years. So I think they just borrowed that. So it's arbitrary and capricious. And then the 1/12th rule has always annoyed me, where you get the first year commission based on when the beneficiary was born. So if they're in November or December, you get 1/12th of the first year commission as opposed to the full first year commission. And why not just wait till January? Again, it doesn't serve any purpose for the beneficiary at all. And it's so much work to do. Even renewals, right? You have to comb through the medical or the drug piece as carefully each year than you did the year before, if you get my gist, right?
Mhm.
It's a lot of work, as you have said. So I think that would be something to consider, but it's not on my critical list to do. But I think if we can make it easier for agents to do their job, they'd be more productive, right?
Yeah.
And it's all about the numbers.
Yeah.
Make it
It
easy
seems
for
like
them to do
anytime
it.
there's, yeah, sorry to cut you off there. It seems like anytime there's additional rules or structure coming out from CMS, it adds complexity, it adds, difficulty in actually, getting customers into the right plan at the right time that they can afford and also has the benefits that they need. I understand that there is a need for regulation and rules and things to protect consumers, but to your point, like, my mother recently turned 65 and she doesn't need a special scope of appointment in order to engage with her agent to be able to make the decisions she needs to make for her healthcare. Do you think it's practical that the scope of appointment could be eliminated?
Actually, I do. I think, and you could even compromise to say that with existing clients, it's not necessary. I could accept it for brand new ones, but once they become a client and you're the AOR, not necessary anymore.
Yeah, or maybe a scope of appointment that doesn't require the 48-hour window or something like that. So you still have to
Right.
sign something.
Again, that was set up to solve a problem following the rollout of the MMA when carriers were desperate to get market share and they didn't know who their agents were. But once they started to appoint their agents, that all stopped.
Yeah. Well, now it just seems like there's more awareness of what the Medicare Advantage market is, the products that are available. I mean, what is it? 50% of beneficiaries are in a Medicare Advantage plan. Is that
Well,
stat?
it's actually creeped over 50%, which is not, that made me nervous when that happened because there's a large segment who believe that traditional Medicare with the Med Sup is the American way and MA is just the devil. It's the private market and a public program. They hate it. And so um, I figured someone might be looking at it. For instance, in the Wyden report, it talks about the increase in commissions over a period of time, maybe 3 times as much. Well, there's been 3 times as much business since they did the math. I mean, right? There are how many per day? 12,000 a day becoming eligible for Medicare, 365 days a year, including weekends, holidays. And so the numbers, we can do math. And it's just an increase in the numbers. That's all. But they make it look like agents are doing nefarious things.
Interesting. Yeah, I saw that stat actually. I think it went from like 2.5 billion to almost $7 billion in terms of the
Correct.
commissions. But
Yes.
yeah, I mean, it makes complete sense. There's more beneficiaries, more consumers wanting to buy those products. So there's obviously more commission being generated in the market, which makes 100% sense. So again, you could probably use statistics to make anything look true. It's important to understand the context here, which I think is what you're highlighting. That's very important. So, John, kind of bringing it back around, tri-branch resolution, we didn't really talk about what you're going to be doing, how you'll be working with your customers. Maybe as we close things out here, what kind of things will you be helping your customers with, and how can people get in touch with you?
Well, I have a website, tribranchresolution.com, and I'm on LinkedIn. I'm working on Medicare, as you know, all things Medicare, as well as ACA. I think that there are a lot of concerns about crossover effects in terms of treatment of agents and brokers. There have been accusations of unauthorized switching, some of which I believe is technology based. I don't think that a human can switch 7,000 customers in 3 seconds before midnight manually.
Mm-hmm.
And but yet agents get smeared with this, and those customers are harmed as well as that agency. I think the AOR means something. So anyway, the ACA really interests me, but like I said, I've worked in all market segments: group, middle group, small group, and individual. So
Okay,
yeah,
great. Well, I know you and I just, recently got introduced, and you took time to, visit BlocBuilder and share your perspective in the panel that I moderated. And I will just say, like, I've really appreciated your practical approach. It seems like you really want the best for the beneficiaries and for the brokers, and you really want to make it a successful industry without unnecessary complexity, which I think is really admirable. So again, I really appreciate you taking the time, John, to share your perspective here, and hopefully we'll get to see you at BlocBuilder again next year in Fort Lauderdale.
that would be great. And I won't have a time zone change.
Yes, that's true, and a little bit shorter flight as well. So
Yeah,
yes,
absolutely.
awesome. Well, really appreciate the time, John. We'll definitely stay in touch and look forward to connecting again.
All right. Thank you, Cory. It was a
All
pleasure.
right. Thanks for tuning in, everyone, again for another episode of Insurtech Building Blocks. Look forward to seeing you next time.